Okay, I think everyone, we're just going to try and get started. It's almost 2:30. So welcome to this panel on values-based investing for the social good. My name is Holden Lee. I'm the Chief Financial and Investment Officer for Federation. It's a pleasure to be here. And we really are looking forward and excited to share with you this topic. It's one that is top of mind for a lot of philanthropists, particularly here in the Bay Area, and also particularly beginning in the Jewish community as well. It's a field that's really still evolving, and what that means is that there are, for a lot of questions people have, there are no set answers. And it means that there are risks, and that there are risks of failure. And yet, there's also experimentation, and there's innovation. And for people who are getting involved in this field, it also means that there's an opportunity for participation and for discovery, and that makes it really fun and exciting. To get started, I would just like to ask people in the room, how many of you don't know that much about this topic, and you only have heard some of the buzzwords like ESG or SRI or impact investing, but you really don't know that much? I mean, by a show of hands, who are those people? Great. And who are the people who have actually read a lot of the papers, who've gone to a lot of panels like this, and have gotten engaged, but have not yet made any commitments in terms of dollars? Who are those? Great. And who among you have actually taken the plunge and either individually or through the institutions you represent have actually made dollar commitments? Okay, so it's a spread. And the good thing is the field is very much like this room. It's kind of the entire spectrum. So what we'd like to do today, actually I can control, is we would like to just, we only have about an hour together, so it's really enough time just to get a quick flyover of this topic. We are going to go broad and through the diversity of our panel and their experiences give you a sense of what this field is all about. We're going to go deep because we'd like to actually level set some of the assumptions and concepts around this topic. And most importantly, we would like to be specific because one of the things that's been challenging for this field is that there has been not enough action. And part of that is the ability to actually contextualize everything to your individual or institutional objectives. And so that we're going to try and give you an opportunity in the last third of this panel to actually break out into smaller rooms, groups, get off of your, out of your seats, which is deadly, we know, at the end of after lunch, and interact with some of the panelists. So that's kind of the flow for this panel. One of the things we know from having a spread of experiences in the room is that for those of you who this is new, you will learn. And for the people who potentially are slightly ahead of the curve on you, conversations like this will help push your thinking. And so we think all is very good. I'm just putting a question up here, really, just to frame the conversation. To get started, as Jewish philanthropists and mission-driven institutions, can we increase the impact we generate from our resources by using value-based investing tools? And there's some basic ideas here. What is our perspective? Individuals and institutions. We want ultimately to have impact, and we have limited resources, and how do we think about that? And these, most importantly, they are tools, and so tools implies that they are not used for every single occasion. So when are they appropriate and when are they not? And as those of you who are at the lunch can attest to, the concept of having a Jewish values overlay on all of this is one that makes this particular session and this conversation very, very specific. So without further ado, what I'd like to do is to move to our panel. Actually, one of the slides isn't here, the names. So what I'm going to do is formal bios are actually in your packets, but what I've asked each person to do is actually to take a few minutes and tell a story about themselves, mostly to understand where they're coming through from this work, to start to get to know them, and that will deepen as we go through the panel itself. So Julie, why don't we start with you, Julie Hammerman.
I would answer yes to that question. Yes, yes, yes. But I know you're not asking me, it's all of you. So I'm gonna share a story about my first job out of college. I was working for JP Morgan, working on Wall Street, and I was in a rotational training program. And one of my first projects was to help the CEO prepare for the shareholder meeting. And I had no idea what a shareholder meeting was, and I was fresh out of college, but he had asked me to put together all sorts of what you would now call social and environmental metrics, but at the time it was just this very confusing list of things that I had to call managers for and collect. And then I sat in on the shareholder meeting, and the room was filled with dark suits, men, and representing very large billion-dollar institutions. And the CEO, Sandy Warner, gave a great assessment of the financial outlook. And at the very end, 3 people stood up in the back of the room that I did not know were there, a nun and 2 gentlemen that were with her, very casually dressed. And they started peppering him with questions about the company, about the social aspects and governance and ethics and environmental considerations. And he started shaking and sweating and grabbing the podium where I had compiled all this information for him, which was fun, as an analyst to see your CEO sweating and shaking. But for me, it was really an introduction to the power of business and the power of investors to create social change. And what I saw as an employee there for the next 5 years was JP Morgan making a series of decisions based on that dialogue with those 3 individuals. And one of those, for example, was to provide same-sex partner benefits at a time when very few large companies were doing that. So fast forward, I drank the Kool-Aid, I was hooked, and I have been in the impact investing space for many years. And I came through the Wexner program about 3-4 years ago in this community, and was captivated by studying Jewish values and text and traditions, and realized that this whole field is based on a value set. There is no one on this panel, there is no one that is doing impact investing without there being a strong sense of values that are at play. And so I started JLens as a project to explore Jewish values in this space. Personally, was very interested. And so JLens now has become a larger organization. We do consulting for Jewish institutions on impact investing. We started a US equity strategy for institutional investors. It's the only, out of thousands of strategies, trillions of dollars, it's the only uniquely Jewish values aligned strategy, and we can talk at the breakout on what that means. It's the only strategy that is against BDS in this space. We can also talk more about that. And lastly, we are doing a lot of next-gen engagement, and we have hired the first or the rabbi of impact investing, Rabbi Jacob Siegel, who is sitting in the second row. And he has developed a curriculum for teenagers on impact investing in Jewish text, and we're piloting it in the Bay Area at synagogues and teen philanthropy programs. So please talk to Jacob about that.
Great, Julie, thanks. So that's again, it's the concept of Jewish values overlaid in this work, which is very important. Great. So next, let's go to Stuart Davidson, immediately to my left. Stuart, why don't you tell us your story?
Yeah, thank you, Holden. When I think back to what's now a little more than 20 years, there are probably 3 questions that really focused me on the path. And the first question was, might one be able to, in the face of kind of the broad, macro, global challenges we all faced of climate change, social inequity, and other things, might we be able to change our thinking and flip that and to really think of those as opportunities? So that was really the first question, is flipping something from a challenge into an investment opportunity. That was my background, that was where I was wired. The second was, how might we as investors think about our investment footprint? And how might we take inventory of the consequences of where we have been allocating our money? And how might we think about that going forward? And then the third was to look at the process, the decision-making process, and how might we retool, or do we need to retool our decision-making process to open up our investment practice to include these kinds of opportunities I talked about in the first question, the things that have been flipped from challenges to opportunities. So those are sort of the 3 things that in kind of the mid-90s were on my mind. And then I embarked, and I had 2 teachers. And one was really that of the practitioner, and then the other was that of the fiduciary. And as a practitioner, I've worked as a venture investor for a long time, and before that was on the other side of the table. And I kind of took what I knew how to do anyway, which was to invest as a venture type investor and to be a venture type investor with philanthropic assets and to do that in different markets and to do that with a poverty alleviation lens. And there I went off as an impact-seeking, risk-tolerating, venture-style investor in multi-sector, multi-geography, and now 90-some-odd companies later, that has been a really, really powerful process to teach one about what happens in the evolution of these capital markets. And what is the same from my ordinary venture activity and what is different? What is it about these sometimes very purpose-driven entrepreneurs that makes them different and what the kinds of businesses they build? And what is actually very, very much the same to what I see in the more traditional commercial venture market? The other part of that is, to me, a very important signal that we can get from kind of the evolution of what I think of as these capital markets is, well, who's out there? You know, who are the co-investors in these kinds of businesses? Where are the pools of capital are available? What capital is not available? And how is that changing over time? And the lesson I took away from that is that there are more managers evolving. There is more of an investable space, and that, to go back to that first question, really sort of fulfills some of the opportunity set that we have. The second thing I mentioned as a teacher was that of the fiduciary. As either a trustee or as an investment committee member or a board member or others, I would be involved in a process, as I'm sure many of you are, where you're the steward of capital for some purpose. And then, you know, that money has a job. That money has to do a certain thing. Your job as steward is to see that it fulfills its financial purpose. And the question beyond that is, what are we trying to do in terms of investing that money? What sort of a world do we want that money to help create? And how might we be able to align some of the values, some of the interests, some of the other things I talked about with that? And as sitting in 4 or 5 different spots, I would come across the same sort of implementation challenges that people would have. Our group would screw up the nerve to allocate in an impact way some amount of money, and then it would turn out that for one reason or another we would be stuck. And that stuckness really was the sort of lesson I took away from that second path. And that is, what are kind of the structural impediments that people face? What kind of an implementation partner does one need? And began looking for that for myself and for some of these other parties. And over time, decided that there was a place for an independent, focused activity, and that drove me to start a firm, to co-found a firm called Sonen Capital, which does exactly that. So
that's great. So and the thing I love about Stuart's story is that he's bringing to the table a historical perspective of watching the venture capital field grow up. So he recognizes sort of pattern recognition for how a nascent field will grow up. And then secondly, it's actually thinking about investing this way, but in terms of a full portfolio, much like a traditional portfolio. So that's I think Stuart brings that unique perspective to this panel. So thank you. Vanessa Bartram, let's go to you next.
Sure. Let me make sure. Does this work? Yes? Okay, great. Thank you. So about 2 years ago, I was sitting in a very noisy coffee shop in Azrieli Center in Tel Aviv, if you've been there, with the CFO of a startup that I had met with probably 7-8 times already, and in which I was looking at making an investment. This is a company called mobilize. They developed a way to screen for different types of cancer using a mobile phone. And the two founders had come together and realized that there are still 270,000 women that die every year in the world from cervical cancer. Not surprisingly, 9/10 of these are from women in the developing world who don't have access to a gynecologist, because this is something that's entirely treatable and costs about $20 to treat on the spot when it's detected. So I'm sitting with the CFO. I'm very much a geek. I love, love, love Excel. So if you want to, get me excited, just give me a beautiful Excel spreadsheet. And we're sitting there going through the numbers. I'm asking questions about all the assumptions that they're using in their financial projections, and being able to sort of map out and look and imagine out the future of this company. How many customers are going to have, how many clinics that looks like, how many women screened each year this is. And obviously this translates directly into, revenue on a quarterly basis that they have, and operating income and net income. And that's obviously something as an investor I'm excited about, knowing what the return for me looks like to this. But all of a sudden I sort of, this sort of switch went off, and I knew from other marketing material that I had looked at before that in the geography that they're looking at, 27 women out of every 100,000 women die of cervical cancer each year. And from the metrics, from the customer numbers that we can project out, we know down to a number, statistically speaking, how many lives this company is going to save each quarter of their projections. And as an investor, we know putting money into this round of this company, this is the social impact that we can expect this company to have over the next quarters, years, et cetera. For me, that was just a really powerful moment. Like Julie, like Kevin, I think like some other people here, I was lucky enough to study with the Wexner Heritage Program several years ago. And one of the most poignant of lots of amazing rabbis and teachers, one of the people who really influenced how I think about my work and just sort of spirituality and life path and responsibility to the world was Rabbi Yitz Greenberg. And very, very broadly, I will not do it justice, but he talks about, as Jews, sort of our job, and not just our job, but our mandate, our covenant, is to bring this world to perfection. And sort of, tiny, tiny millimeter by millimeter. And what I loved about Yitz was that it's just so practicable, and it's so, for Israelis, the Hebrew, tachlis, because it's not just this idea of let's sit home and pray and, cross our fingers and hope the world gets there. Yitz talks about that in every single decision, every single action we take, whether it's interacting with a stranger or how we invest our money or whatever we're doing, that we're making a decision about the world that we want to live in and how we get it to a state of perfection. So that really influenced a lot of my work and is a lot of the sort of the inspiration behind how I think about my work and the investments that I'm making and how I engage with these companies to make sure that we have both financial and social return. But also for me, it sort of took it back to that spreadsheet and to be able to take this concept, that I'd learned about with Yitz and that was so powerful for me, and to know that we can model that out in an Excel spreadsheet, that was just, that's just my kind of fun. So now I'm based in Tel Aviv. I'm investing in startup companies in Israel that are having social environmental impact in health, education, poverty alleviation, and the environment. And we made our first 4 investments over the course of the last 18 months. And yeah.
That's great. And so again, remember this beginning part, we're trying to give you a sense of the breadth. And so this is a very different kind of investing. It's at the company level, private company level, and it's in Israel. So that's great. Thanks so much. And then lastly, Avi Deutsch, please.
Thank you. So first of all, thank you. Thank you. I want you to realize how amazing it is that we're sitting here at the San Francisco Federation talking about impact investing. This is not a conversation that's happening in all Jewish federations, and it needs to be happening. So thank you, first of all. I want to take you back to a story from 2013. I was living and working in a youth village in Rwanda, which is modeled after the Israeli youth villages. So after the Holocaust, Israel had an influx of orphans from the Holocaust, and they were teenagers. And that's a very unique problem. You don't usually get an influx of orphans at that specific age. Fast forward to 2005, 10 years after the Rwandan genocide, and there's an influx of orphans at the same age. And a Jewish American philanthropist says, can we take this model, this innovative model that was developed in Israel 50 years ago and is still incredibly successful with dealing with at-risk youth, can we use this to tackle the problem of orphans in sub-Saharan Africa? And she did. She brought this model to Rwanda and piloted it very successfully to work with 500 orphans coming from the most difficult backgrounds in Rwanda and giving them the best education in the country. Amazing. But for me, there was a but. And the but was, that was 500 orphans out of over 1 million orphans. It's not even a drop in the bucket. And for a variety of reasons, that solution was very hard to scale. It was actually very hard to maintain, not even mention scaling. And that was very frustrating to me. And then I looked around Rwanda, and I saw a new generation of solutions. I saw a new generation of solutions which are just like what Vanessa just talked about, market-based solutions, right? And the market is an incredibly powerful tool. If you find a solution that is a market-based solution, like a for-profit app, like training farmers, those are solutions that are scalable and they're sustainable. And they can really move the needle on some of the challenges that we're facing, these immense global challenges that we're facing. So I got very interested in this world of impact investing, and I learned 2 things. One, I learned that I wasn't alone. A lot of millennials care about this, and I hate to put myself under that category, but a lot of young people care about this, and you know what? It's not just young people. We tend to focus on young people. A lot of baby boomers care about this. This is something that is prevalent not only in investing, there's a shift in how we think about the relationship between money and work and investing in values. And that shift is everywhere. So that was one thing I learned, that there were a lot of people who were interested in impact investing. And by the way, there's a ton of research about that. The other thing I learned was that the Jewish world is changing so dramatically. And there are all these new, and Sam Goldman said that we never expected, right? Our ancestors probably never expected the Jewish world to look like it was. But despite all these opportunities to participate in the Jewish communities in new ways, there are very few opportunities to participate in impact investing within a Jewish community. And impact investing, and Julie said this, it's all about your values, right? And why is there no place for us to come together to talk about what it means for us to invest in Jewish values? So together with some amazing board members who are sitting here today, we launched an organization to change that and to create a place where young and old and everyone can come together and say, what is it that makes our investing Jewish? What does it mean to invest in Jewish values? How can we bring young people into the room and to the table to talk about what it means to invest in Jewish values? And how can we actually make investments together? And finally, how can we move more Jewish capital, whether that's private or institutional capital, into value-aligned investments? Because the Jewish world is so far behind, it's embarrassing. And we should be leading the charge on this. And instead, we're sort of just dipping our toe in the water. So how do we change that status quo?
Thanks, Avi. So again, a different facet to this investing is really more about how do you actually create a network for engagement to harness a lot of the sort of the intellectual capital in the room to deploy money. So if you listen to these different stories, again, it's very different aspects of the field, but there are some commonalities. I mean, the sort of things that I hear from the stories are things like, it's the balance between your right brain and your left brain. You need both sides to really do this work, or you could say it's a head versus heart balance, that kind of integration. But above all, obviously there are characteristics such as passion. There's a lot of intentionality, which I think is an important concept in this work, and a lot of discipline. So it's not just all heart. So I'm just going to take a minute to unpack some of the basic concepts that are actually standing behind each of these stories. I think if you think about traditional philanthropy, how do you do it? You take your money, you invest it, you take the returns, you hand it to this hand, and you grant it out to a nonprofit. And that is how philanthropy has traditionally been done. And yet in this new paradigm, the central hypothesis is, can you do both? Can you do a single transaction intentionally that will have a financial return, but more importantly, it's the impact. And so it's the impact is the end goal. We don't want to lose sight of that, but it's all in service of the impact you want to see. So it's really moving graphically from 2 dimensions to 3 dimensions. So traditionally, you think of risk return when you're investing. The green triangle, for example, up here is a fixed income investment. Minimal risk, minimal return. That's in 2 dimensions. Or if you're just doing traditional grant making in the red, it's actually you're having impact and there's risk of achieving your outcomes, but there's no financial return. Very simple, thinking 2 dimensions. The challenge is when you put it all together. 3 dimensions, risk, return, and impact in the yellow triangle. And that is the part that, as I said in the beginning, all the answers are not quite there yet of what that yellow triangle means And what's interestingly enough is that as pioneers in this field, effectively what each of these panelists and all of the people who are engaged in this work are doing is actually trying to answer the question, what does that yellow triangle mean for them or for you individually? So the other concepts to overlay, it's really, if you're a fixed income investor, you know what that means. If you're a foundation philanthropist, you know what that means. However, when you're trying to answer the yellow triangle, what does it mean to think in 3 dimensions? Values. So that's something we've heard over and over again, is what does that mean in terms of a philosophy or an approach of how you define that yellow triangle? What kind of impact do you want? What are the trade-offs you're willing to think about? What kind of risk do you want? So values, objectives, and this is something that Julie and I were talking about at lunch. One of the key challenges around this is actually trying to define what do you actually want to do? Because if you don't know what you want to do from within, from your own point of view, it's very easy to get lost in this field, again, because there's no definition. And it doesn't have to be fixed, because it's an evolving field. But I think the objective is an important one. And then lastly, measurement. This is something for all the quant junkies like Vanessa, is increasingly important. Easy on the risk and the return side. We've got all those metrics from before. It's the impact side that's still developing and still evolving. So this is from the investor's point of view. You've heard it basically through each of the stories, and this is from the investor's point of view. So flipping around to the market, implementation, what have we been hearing? We've been hearing about investment strategy. So once you've decided the objective, how do you get there? You've already heard various investment strategies, even though you may not know it. Vanessa and Avi described investing in private companies as a way to do it. That's a strategy. Or Julie's story about having a mutual fund as a basis for having advocacy in the boardroom. That is a strategy. Or Stuart, through Sonen Capital, advising total portfolio of capital that are aligned with values. That is a strategy. How do you get there? Asset class is something that sounds very traditional, and actually it's important, and asset class meaning, for those who are doing traditional investing, things like public equities, private equity, it could be real estate, it could be fixed income. It sounds traditional for a reason. It's because this is, in fact, a variation of investing, and so there are products springing up in all these traditional asset classes. So it's another way to think about how the marketplace is responding to these needs. And then vehicle, and the reason why I put vehicle up here, this is the actual on the ground, how do you get things done? Is it investing in a public fund? Is it investing in a private fund? Is it investing in your own direct transactions with the lawyers and the negotiation and all that in a term sheet? Those are different vehicles, and they determine what the cost is and the effort and the kind of resources. And that's another important consideration that you've heard through the panelists for implementation. And then the last, the grid, the 2 arrows I put at the bottom of the scale, at the end of the day, remember, impact is the ultimate objective. It's what do you actually want to achieve? And there is risk, of course, in this. One way to control for the risk is to think about, through this kind of investing in this tool, how much influence does the actual investment have on achieving that impact? How direct is it or indirect? And that's a way to think about it. So in the old school, sort of exclusionary screening world, I'm not going to invest in tobacco. How much influence does that really have on changing behavior? Versus, let's say, in Vanessa's case, for that cervical cancer screening, how much will that direct influence will that investment have on actually creating those solutions? Or advocacy, in Julie's case, how much direct influence? So again, flying through these concepts, but again, you hear these in each of the stories that we've been told. So what I'd like to do now is that it's a lot of information. We've kind of given you a quick flyover in breadth. You're now armed with a little bit of the basics. And so what I'd like to do now is just to open up a little bit of a conversation with the panel. And the way that we had talked about doing it was just thinking about assumptions. I think, again, there's been a lot of hype and what's been said about this field. And there are some questions, certainly. It was raised in this morning's panel on life-giving that, is this all hype? And there are some basic assumptions that have been, and questions that have been raised. I put 3 of them up here. First one is that there has to be a trade-off between financial return and impact. There's no way to have one with the other. It's binary. Investments are hard, they're expensive, and they're risky, very difficult. And the third is the issue around measurement, that you really can't tell what is your money actually doing in this field. So I'll start with the first one around trade-off. I don't know, Julie, what do you think? I mean, do you have to have a trade-off?
Well, in certain strategies, there is a trade-off, right? The more impact in some strategies, the less return you can elicit from an investment, or else the fund or the company is not going to be able to have an impact in the same way. But there are absolutely many studies that have been done that traditional strategies and values-aligned strategies perform on par, especially in the public equity space. And ours is the strategy that we created one strategy. It wasn't our intention. We actually do look at an entire portfolio, but we saw a gap, created one strategy, and it is by design a market rate of return. It is the same as the S&P 500 index, essentially. So by design, it is market rate of return. But I don't want to minimize the fact that there are situations where there are incredibly, and some of the most exciting investment opportunities coming out of this space, like social impact bonds, or on a risk-adjusted basis, there is a potential for a lower return.
Right.
So I struggle with that question, but all the studies have shown that you can get market rate of return, absolutely.
Right. So that's, on the public side, it's easier to replicate because, again, because the metrics are easier to determine whether you're achieving it. What about on the private side? Vanessa, what do you think? On the private side, how do you think about that trade-off?
I think on the private side, it really is contingent on the business model of the company. And I think there's a real, I'm most familiar with the sort of macro universe in Israel, and there's an array of different products in the impact investing space there, different organizations that have different ways about going about this. It depends on the business models that they're investing in. Some of these are business models where their commitment to impact means that their operating costs are higher, and yes, you as an investor are going to have a lower return. In other models, I only look at companies where that return and the revenue and the impact go hand in hand. So, for instance, in mobile ODT, the more that they sell, the more women will be screened and the more lives will be saved. For me, those two, the impact and the financial return, need to be in sync for me and not in conflict for me to even consider an investment there.
Right. I think for me, it comes back to that operating question is, what do you as the investor want to accomplish? And there, just like either at an individual investment or even a portfolio, what are you trying to do? If impact is paramount and you don't care about the financial return, that's one type of investment. If, like Vanessa said, the financial return is actually an indication of whether the solution is working and will have uptake and scalability, that is the answer. So I think it's an interesting, I think in the field there's been a lot of conversation that it's a binary question, but I think it is really, it depends, which is kind of a wishy-washy answer, but it really is back to that, as an investor, what do you want to accomplish? It's really asking that question around objective again.
One way maybe of sorting out it depends is to think about sort of the pedigree of the impact. That second question I talked about is, what is the consequence of this particular investment? And because both, I was puzzled by this because both are true. In some cases, there was a trade-off. In some cases, there wasn't. So what was going on? And if I look at what's the actual pedigree of the impact inside that investment, for example, you've got this platform technology that's doing the cervical cancer technology, that's one thing. And I don't think there's necessarily a trade-off at all in that kind of an investment. There is a technology platform investment. The alignment between what we're trying to do as an impact, make cheaper, more available cervical cancer detection is sort of the DNA of that impact is linked to the core of that business. If you and I were going off and we were doing a low-cost housing, an affordable housing loan program, and it turned out that for every percentage of interest that we would reduce would create a certain number of additional affordable housing units, then there's like, that's like a hardwired link between what we would be trying to do, create more affordable housing units, and the financial instrument and the return characteristics of that financial instrument. So to me, another way to think about that question is to look at this pedigree of impact and start to understand what's the nature of the business and what is the relationship of the impact to that business.
I like that concept because it's the different level of impact would call for different solutions. So if you are trying to make sure a venture is profitable, just so that it has sustainability, it doesn't die, that is kind of one level. If you want to actually draw in other investors that may be atypical investors, it actually may be the answer may be a little bit different. It can't just be good enough. It may have to be spectacular. I mean, you can imagine if it was a 2x, 3x, 4x return on this kind of investment, it would catch people's attention and draw in other investors. So, again, it's back to what are you trying to achieve? And I think that is the challenge of moving from 2 dimensions to 3 dimensions. And that's the way just to have the brain flex. One of the things I think it's interesting is if you want to go 3D at the transaction level, it's easier to think about Vanessa's company as one kind of investment. When you try to put it all together in a portfolio, like Stuart's doing with fixed income and all that, that's like almost from 3D to 4D. And you're trying to really think about what are you trying to accomplish. It's many, many, many more variables. So it's a hot button topic in the field about this return versus impact. And I think it's some interesting thoughts there. What about investments are expensive, risky, and hard to find? I mean, Avi, I know you've created a network. How are you guys sourcing and finding your investments?
Sure. I think it very much depends on what types of investments you're talking about. And there's been a lot of people associate impact investing with a small private investment, right, made into a sub-Saharan African village. And the lens of impact investing is so much broader than that, right? So if you're talking about investing in an ESG, environmental, social, and governance strategy, which is usually in the public markets, well, then obviously that's ridiculous, right? Because those strategies are available, and there's lots of them out there, and there's a lot of research that shows that they perform on par or better than traditional strategies. Where it gets tricky is when you want to look at private investments or funds. I'd say funds, it's hard to find good funds, it's true, but it's hard to find good funds, period. Yes, if you want to look at small private investments that are tackling a certain problem, it is hard. The solution that we use is to partner with organizations that are doing this. So we work with a variety of funds and incubators and other organizations that are local on the ground that already have the companies and have already selected the companies, and we can source from them. There's no need to reinvent the wheel. And one of the most powerful tools I think that's emerging in impact investing is the power of partnerships.
Interesting. And Stuart, what about you in your practice? I mean, how do you find investments across the asset class spectrum for your clients?
Yeah, it is I talked a little bit about this in the introduction, is that investable space is evolving rapidly. And I think that, to your point, it is broader than one thinks. Oftentimes, just people's mindset is it has to look a certain way. But actually, if you look at across asset classes and start to think through what are representative investments one might be able to make in, say, a liquid cash investment or a fixed income or in an equity strategy, there's more investable space than would meet the eye. And I think that what we've done and what I've seen is that developing a specialized research group that can help identify some of these managers or some of these investment opportunities is new and different a little bit, but how they do it and the framework is dramatically similar to what we've seen in the rest of the financial services market.
Right, and I think to me that's kind of the interesting thing that's been developing is a lot of these concepts are going to sound very familiar. Remember back to our little terms and level setting of information flyover. We talked about things like risk and return, risk mitigation. We talked about things like asset class. We talked about things like how do you mitigate risks and what constitutes success and how do you know something's going to happen? I mean, those are all very sort of traditional due diligence terms. And so I think that is I think that, with a grain of salt, it's an emerging field. I mean, and Stuart's better equipped than any of us, having gone through sort of emerging venture. You can imagine venture capital field 30 years ago. Again, the ecosystem not as well developed, all the metrics not as well developed. I mean, and yet people put one foot in front of the other, and you got through it. So I think it's interesting to think about history as a context that this industry, as well as it evolves, can also be approached with the same kind of discipline. But again, it's discipline in 3D as opposed to 2D, which means we're still developing the answers. And I think that goes to the last assumption on here that I'll touch on. How do I know that the impact's being achieved? And this is not just an impact investing question. This is I would say, broad philanthropy question. Maybe Julie, I'll go to you. I mean, how do you think about knowing whether you're achieving impact?
Yeah. So a lot of the work that we do on the consulting side with institutions is they have a financial advisor in place. And so we are looking at the impact side. How does it align with their mission? How can we quantify it? How can we report on it and make it clear and easy to understand? It's really a specialized skill, which is why it's very hard, which is why what Sonen does, which is specialized, is so unique in this space because it's a whole lot of work, and it's very complex, and it's hard, and you're really what we call lifting up the hood on a lot of factors that aren't measured or aren't communicated. But you can do it, and you can do it really well. And one of the things that we do at JLens is, which we were talking about at lunch, is that we actually start with values. So we identify the values of the organization or the foundation or the institution, and then we track back all of their investments to those unique values, what it is that they care about. Often it's social and environmental and Israel and tied in there, but backed in.
Wow. And Vanessa, you're the Excel junkie. So how do you think about measuring and for your investors? I mean, how do they receive it?
Mm-hmm. When I started doing these investments, I wanted to do it on a deal-by-deal basis. And so when we bring it to investors, we give them the choice of which deals. All of these I've already vetted and I'm willing personally to invest my money in before I even invite them in front of investors. But part of it was because our values are, as much as they're similar, they're also different. We have people that care about environment and want to see what sort of KPIs and what progress a company's going to make in environment. Other people that care about health. Other people that care maybe about a particular geography versus another. So I look at sort of our job and how we do this to clarify it and put the information out there so that people can be making the decisions that are important to them. One of the things that I think is so encouraging is that increasingly the field, particularly in the sort of private and venture capital space, is coming together around sort of common standards for how to understand these things, how to track these things, how to sort of do an audit on a company and assess their environmental, social impact. So it's nice that not everyone has to reinvent how this is done. Increasingly, companies are having standardized ways to do this.
No, that's great. And it's all, I mean, Stuart, this is, again, consistent with an emerging field, right? All the definitions, they're coming up. It just means that when you're investing now, you have to take all of this into consideration. I mean, being a pioneer is not without risks. And so the question is, the biggest question as is evidenced by a lot of people in the room is, how do you take the action? It's that last step. I can intellectually understand all this. I can think in 3D. But actually doing it when the field is still is still shifting, that reality is trickier. And so we're gonna acknowledge that. What we wanted to do for the last 20 minutes or so of this panel is actually take some action of our own. So what we're gonna do is we're actually gonna, in a minute, everyone's gonna stand up, and we're gonna actually allow you to break up into small groups. And the main focus for the breakout groups is, how can I, in my own context, take action? And we're gonna break it up into 5 groups, largely aligned with the stories of the individual presenters. So we have, going around the room, we have investing through engagement with Avi. We have investing with Jewish values with Julie. investing through a total portfolio with Stuart, and we have investing in Israel with Vanessa. I'm going to actually stay here towards the center as a kind of a catch-all if you have any questions just around general assumptions. What we're going to do is each group is going to, we're going to go to your corners. It's going to be a little bit of a logistics, kind of reorganize the room as needed. And we're going to be able to talk very in small groups with the panelists and to weave in everything that you've heard, everything about concepts, assumptions, your questions, and the expertise. And the good thing about the panel is that they can answer anything. I mean, it's not uniquely tied to the groups, so they're really great. But at least we'll get a chance to get everyone out of their seats because we know it's 3 o'clock after lunch, everything's settling, and actually to have some good conversations. So about 20. Why don't we do that now? Everyone go to your corners, and we'll just start those conversations. And I'll give a time. I think the next panel begins in about 15-20 minutes. I'm just going to do a few closing thoughts and then turn it over to Kevin Waldman to help us actually close out the panel. So a lot of great conversations that I heard. Someone asked me about materials and resources. So one of the things that we were going to do was, from each of the panelists as well as some other resources, create an electronic packet that could actually go out subsequently. So if you're registered for this panel, we will email it to you. If you're not formally registered, just come up to me. We'll get your name and your email address so that we can have resources coming out. So, again, the most important thing about this this panel was to give you a few touch points and to leave you wanting more. That's frankly. So hopefully you have that. Questions and exploration. It's been really interesting, especially back to the founding question about values in this kind of investing and how to achieve your philanthropic objectives. So thank you very much. I'm just going to turn it over to Kevin Waldman to help close us out. Yeah.
So I can see everybody's punums. So thank you very much. I'm Kevin Waldman, and I am a past board member of the Federation here. I'm also a past president of the Young Leadership Division, so it does feel like old home week whenever I'm at a Federation event. I want to thank Holden for moderating our panel today, and for our panelists, for Stuart, Avi, Julie, and Vanessa. Thank you very much for your time, and Vanessa was the one who traveled the furthest all the way from Israel to be part of our discussion today, so thank you. As far as a takeaway from this session, I feel like at some level we're at the early stages of this whole movement around impact investing, and while it's been around for a while, there's a great momentum that's continuing here, and I just want to encourage everyone as you navigate your professional lives and your personal lives, just start to put your ears a little bit more aware of this topic and this conversation, and bring it up with people that you are engaged in dialogue with about the world of impact investing and how Jewish values can also play a role in that. For our speakers, I have a gift for each of you. So I grew up in the South. Good, they're at the table, but I grew up in the South. And when we used to leave home every day, my mom would say, "Be sweet." So we have a special honey server that we hope will be useful for all four of you at Rosh Hashanah, and going to bring some extra sweetness into the year ahead. As Holden mentioned, there are going to be some follow-up materials that are sent. In the packet that was at your seat is a report from the Case Foundation, which I actually think is pretty interesting. So you have one already that you're taking with you. And then lastly, there are two sessions going on after our break that are both going to be fantastic. One features Jeff Swartz, our speaker from the lunch, and 3 Israeli women leaders, including a close friend of mine, that are all forging a path towards an integrated democratic Israel and a shared society. One's Ethiopian Israeli, one is a secular Israeli, and one's a Palestinian Arab Israeli. And so I know that was going to be a fantastic panel discussion. The second session features the work of David Breifman on Gen Now, and has 3 amazing teens who will share their insight on what it will take to increase the number of teens involved in Jewish life. So both, I think, of these sessions are going to be really interesting. And our federation's making teen engagement a priority. So if that sounds interesting to you, join them at 3:50, and that's going to be just in this area here as well. And then at 5 p.m., there's a cocktail party for further talk with our speakers and honorees. And thank you very much for being here. Thank you, Holden, and thank you to our panelists.